Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Well, it is Tuesday, and the market is just really shaky. It's moving up and down and sideways, but there is one company that seems to be rocketing, and that is Rocket Mortgage. And just a few minutes ago, I put out a bull put spread on that, which might be of interest to you. And it's available for everybody that's on our action trade alerts. So kind of a cool thing. So without further ado, let's see if we can get into these slides. So let me get there we go. Getting all this, there we go. All right, so let's get into the slides. Basically, it's looking like, Rocket Mortgage has taken off. But there is the market is still in a confirmed, it's still kind of going sideways a little bit. The S&P is down a little bit, but we are in an uptrend under pressure. So really kind of on the knife's edge there. It's a little bit difficult because, a lot of the techs have pulled back. Zoom pulled back quite a bit. Hopefully it'll turn around. If not, I'll have to close that spread that I have on it, but that I put on yesterday. But it's just a kind of a crazy thing. Seems to be a lot of activity moving around in the market. So Dow Jones is up a little bit. The New York Stock Exchange is up slightly, and the Nasdaq is down a little bit, but it's still significant. We're still above that 13,000, so that is a good thing. Let's see. I want to show you this interesting company. It's called Rocket Mortgage. Of course, you may have heard of it. It originally, I think it was called Quicken Loans, and then they changed their name. They went public, and it has just been on an absolute tear. I mean, when this was taken, I put a bull put spread on this, so to get a little bit of exposure to this. It is up unbelievably. And I don't know if this is just what's going on here. This may be a short squeeze. You just don't know what's going on here. But I did kind of put a bull put spread on here, basically buying some 20 puts and selling some 25 puts. So hopefully that will work out. Anyways, it's available on the action trade alerts that I just put out this morning. So, well, actually just a few minutes ago, because I kind of got waylaid on some stuff today. Just kind of want to show you what I have currently, what I'm holding. Not a lot. This is all in the small portfolio. Basically Ford, it's up a little bit today. Seems to be acting pretty nicely. Halliburton's down a little bit. Rent-A-Center is down a little bit, but it's been up. And then Mosaic, this is the exciting fertilizer company, but it seems to be doing good. So can't complain all that much on Mosaic. So let's get to some of the questions here. Let's see. And we've got a lot of people waiting. Thank you. All right. Let's see. Tesla. Okay. Yes, sirree. Tesla is, I'm not in Tesla currently, which has been a long time for me not being in Tesla. But let's take a look at it, because it seems to be, kind of getting some support, and that is indeed important. So let's take a look at the chart here for Tesla. And that's basically this right here. We seem to have kind of gotten some support in the 680 level here. We did this big tear down all the way. I've been out really since about I've been out totally since about 720. Basically this line here, this is the 21-day moving average. It looks like it may be getting some support. This probably will base again, hopefully here between about 650 and 700. That's this area here. So, let's just kind of look to see kind of how it's been trading on the 60-minute chart. Off a little bit today. Definitely been some selling. Let's look at the monthly chart. It's still, look at that monthly chart. It's still stratospheric. So Let's look back at the weekly chart, see if there's any kind of, yeah, it went down. It seems like it's tested. Interestingly enough, Tesla seems to be more played on the whole numbers. It looked like it went down and it tested 600 last week, and then it seems to be rallying up a little bit here towards the $700 mark. But it seems like we have essentially some support right about there. So that is, and I'm just going to set an alert there, kind of on that line, to see if we, see if we get support on that line, because it looks like, it pulled back and then tested. So it looks like that's kind of where, where we're getting support. So right now it's trading at 681. I don't think, I think that support may be a little bit lower than that, hopefully at about 675. Not a good time to be buying it right now. We still have a very good strong RS at 96, but the line has been going downwards for a while. So right now it's still a watch list for it's basically still time, basically to watch list Tesla. I think that's really what we got to do. We it just hasn't given any, it hasn't based or anything like that. So what I think we're going to have to do is we're going to have to probably hang out a little bit, watch list this one, wait for a base, and then maybe we will have a a buy point. I don't think it's going to go down and test the 200-day line, because that's basically at about 450. I don't think it's going to test the 200-day line, and I think it's going to see some support, between about in about this 600 to about 680. It's really a little bit above that. It's down significantly today. Of course, Tesla is one of the more volatile stocks out there, so that typically is the situation with Tesla. It's just quite volatile. Now, if you're down more than 7% on this, I mean, you can hang on. I do think it's going to recover, but here's my viewpoint on Tesla. I think that it's going to form another base. The last time it formed a base was at 502.49, and that was an excellent place to buy it. I bought there. I rode it all the way up to about 880, and then I basically started selling out. I do think we're going to get another bite at the apple here, and I think that's going to be right at about 600 to 650. And I think if it forms a base at that level, maybe a little bit higher, then I think it may be off to the races again. But right now, we're showing we're showing on the chart, we're showing a little bit of decline in terms of the we're showing a decline in terms of the volume. Okay, so that tells me that there are sellers out there, but there's not a lot of it's not like a sell off. I do think this is indicative of a basing action. This is not really this possibly here when it came down here about 5 days ago, that potentially was a sell signal, but it seems to have recovered since then. So this is the kind of the line that I'm looking, kind of my line in the sand. I want to see it settle there. If it settles there and then it moves above, possibly the 40-day line that's here, then I will probably be back in. Now the 40-day line currently is about is about 775, so it's quite a ways to go to come back to that. But it's very volatile, and I just think it's just trying to find a base. It's trying to figure out, has it moved too far too fast? But I do think we're going to see more action on that. So wait for it to base out and just kind of watch this, and see where we're going there. Thanks, Siad. He has a question on Square. Let's look at Square, SQ, to see what is the deal there. Well, it looks like we may have a kind of a bounce there. That's very nice, actually. So let's zoom in a little bit on this one and kind of get a look-see at Square. So here's the chart for Square. We had this, we did have a, we did have support there. It pulled back below that. It looks like the support is right about that line. So let's see. that's giving us, right, let's pull that back a little bit and take a look at the track price on that. Okay, so we seem to be getting some support right about here, actually, a little, about 200. So here's the thing. It does look like it's made a reversal, and it looks like it is going higher. It is above the 21-day line. You could buy it at this level. Let's kind of see if we can go to the weekly chart to see if we can get sort of an idea of the, yeah, it's maintaining this, it's maintaining this track here. So that's good. Let's kind of look at the channel here. So yeah, I mean, it does look like it has made a reversal and it's moving higher. It could move as high as 300 in the next about 3 or 4 weeks, I believe. That's kind of what I was looking at. Let's kind of take a smell test on it to make sure that indeed it is, it is the kind of stock we still want. Let's see. Checklist is still really good. 8 out of 9, so that's excellent. Ownership is good. Fidelity, Contrafund, everybody good's in there. The sector is fallen a little bit. This is an issue, of course, because this is an issue because there is a rotation out of tech, and this is the thing you've got to be kind of careful with right now. There's a rotation out of tech. If you notice in my smart portfolio, which is I'm basically, I really don't have any tech names in there. I've got Ford, I've got Mosaic, which is a fertilizer company. I've got I've got Rent-A-Center, which is about as untech as it gets. The only thing that I really have tech exposure on right now is with my spreads. I do have a spread on Rocket Mortgage, which isn't really tech either, and I do have a spread on Zoom, which has been crazy, kind of all over the place. So here's the thing: if you're in this, I would stick in this. I do think it's moving higher. Looks like it's reversed nicely. If you're down more than 7%, you've got a decision to make. I don't like to hold anything, especially in a market that's under pressure like we are now. We're under pressure. I don't like to hold it if I'm down more than 7%. But I have a lot of conviction with Square. Square is a good name, and it's performed extremely well. So that's been a really, really good thing with Square. All right, thank you for that. Thanks, Dinesh. VUZI. I'm not familiar with VUZI. Let's look at VUZI. VUZI. See kind of what's up there. Interesting. Eyewear. Okay. Well, I am not familiar with this company, but boy, it's looking good. I think there's a nice little Easter egg here, and there's been some heavy buying of this. Relative strength of 99. Wow, this might be a real find. I don't know this company at all. I do like the fact that it's in, I do like it looks like it's in medical. Yeah, look at that rank, 7. Wow, that's great. Consumer Product Specialty. I am not familiar with this company, but boy, this is looking pretty darn good. Look at that, 88%. Whoa, that's very good. It's it has lost funds, but it seems they seem to be coming back in. Wow, this is interesting. I don't know much. This is a relatively thin stock. Let's kind of take a look at some of the other aspects of it. I just want to see what's there. Tilray, okay. Manufacturers and eyewear for industrial markets. Interesting. Unfortunately, there's no real place to buy this here. This is, the last real base on this was a cup back in December, and that was the best at 531. So this is an interesting company. I couldn't recommend buying it right at this level just because it's just so far extended. And anything that's really extended like this is always a danger because it always, almost always will pull back. Doesn't mean it's a bad stock. It just gets ahead of itself. And that's definitely the case here. It looks like there's a channel here. Okay, interesting. We have a channel right here. Okay, so it went a little bit above the channel. It pulled back. Right now, this is pulling back, and I wouldn't buy it unless we got a reversal. Where I would see if I could do anything would be see if it reverses off of the the 10-day line, and currently the 10-day line is about $19. So if this pulls back, Dinesh, to about $19 and then reverses at the 10-day line, then I think you could possibly, that would be a very, very aggressive entry on this because this is so far extended. But if it pulls back to $19, reverses, then I think you possibly could do a very small entry. I wouldn't buy any more than about a quarter position at the 10-day line. I think at the 10-day line, that's the only place you really could enter it. Fascinating stock. I'm going to put this one down for a possible more look-see. VUZI, VUZI. Boy, thank you very much for that, Dinesh. That's a real interesting. That's an interesting stock there. All right. So let's go. Oh, a question on Barrick. Thank you, Jeff. Barrick Gold. What is it, and what are your thoughts? Well, Barrick Gold is one of the biggest gold miners in the world, and along with several other stocks, it represents a very big deal. Barrick, I think their symbol is gold, GOLD. I think that's it. Am I right about that? Yeah, Barrick. Absolutely. This is an inflation play. Now the question is, do you think we're going to have inflation? Well, I think we are going to have inflation, but right now the trend on this chart is decidedly downwards. Now mining is coming into favor. That's one thing I will tell you. Mining is coming into favor, and I did buy Mosaic, which is essentially a potash miner. But the trend on this is downward. It has a relative strength of 2, so I just can't recommend it at this point. The last buy point was consolidation at 28.50 way back in June, really, of last year, and it's below that now at 19. Now it's moving up. It seems like it may have bottomed. This could be a reversal. I mean, this absolutely could be a reversal. I mean, but unfortunately, the gold and silver miners, it's sort of at the bottom. Some of the miners are doing very, very well, but they typically are mining. They're not mining gold. They're mining things like potash and other products like that. They're more the commodity products. This one, I just think you can't. I just think this is not a good time for Barrick. So here's what I would say about Barrick, and please don't take this in the way. I just don't think, I think with Barrick, you just really have to be careful. And, I think basically with this, I think you just need to avoid it for now. It may come back. I mean, but right now, Barrick Gold, I mean, I know there's a lot of gold bugs out there saying there's going to be a lot of inflation. There is, but it just isn't happening now. So I would avoid this one. Because it's it's got a weak relative strength. So, that's really my advice on this one, is really to avoid it. It's got a weak relative strength, and it just isn't really, it isn't really doing it isn't getting the right kind of action. Now, if you are interested in a miner, and I do think miners are good, you might want to check out this one. It's Mosaic, MOS, relatively thin company, but this is also a miner, and this has a much better chart. And I'll take a look at this chart. As you can see, it's trending upward, and it's up $1.69. Now, this is in the small portfolio, by the way. I do have this one, kind of 77 checklist. The ownership is increasingly good, and it is in the mining sector, but it's agricultural. So basically what these guys do is they make fertilizer, and it's potash mostly, and they mine it, and they put it on fields, and it makes the stuff grow. So this is doing quite well. So not all the miners are bad, but the gold miners, not so good right now. So that's something you got to be a little bit careful with, looking at some of these stocks, is that you have to be, it's not just enough to be in the mining stocks. You want to be in the places that are going to have some better luck. So thank you, Jeff, for that question so much. My thoughts are, for at least for right now, for some of the mining stocks, I think you possibly want to avoid them. at least for right now. Maybe watch list it, but it's not a good time for gold. There is a gold company though that you might want to possibly put on your watch list. It's called FNV. That's the symbol for it. It's Franklin, Nevada, and basically they're not a miner. They just own the rights in other mines. And this is one that this is proven gold. They aren't pulling this out of the ground. It's already there. And this is called Franklin, Nevada. Franklin, Nevada Corporation. And it's up today, $4.37, or about 4%. And so this may be making a turn, but still very, very weak relative strength. The gold miners just haven't seen a lot of love yet. I typically like to be a little bit late to the party. When the gold miners start turning up, I will be knocking at their door. But right now, the gold miners haven't made that turn. So it's just the kind of thing where you got to be careful, with the golds, because that can be something that you would think that right now with all this potential inflation, you think it would be just so easy, but it really isn't. So gold miners, I think you got to be super careful on it right now. So let's go to TikTok. I'm going to kind of flip through some of the TikTok people. Thank you so much. By the way, we just broke 70,000 on TikTok. I'm so excited. We have 70,000 followers. Wow. So a lot of people out there are interested, and that's a great thing. What do you think about CCIV? Now, this is a blank check company. Not really a fan of blank check companies all that much, but I know that a lot of people are very interested in it. It's called Churchill Capital. I just don't think it's really worth your time. And the reason I don't is because it's not really a company. It doesn't really have any earnings. It's just a big bank account that I wish that I had. And it hasn't invested in anything. Now, they are probably going to invest in something great, and they're probably going to be doing great. But right now, CCIV, I just think you got to avoid it. It's just definitely one to avoid. I know that on the chat boards, and they might be right. They might be right on this, but at least for my money, I wouldn't be in Churchill, because it's just there's not enough there, as they used to say. There's not enough there. It's just really just a big checking account waiting for a company to list on the exchange. So not something I would probably be doing right now. Anyways, let's look at XONE, XONE. Thank you very much. XONE. I'm going to take a look at that one quickly. XONE. X1 company, and it make the printing machines that do 3D printing. And that seems to be a big theme, hopefully, with some of the manufacturing coming back to the US, I think 3D printing is going to be a big deal. This has got a 98 relative strength, very strong. Let's kind of look, the last buy point on this one was a little bit of time ago. It was on a consolidation base, 1689, basically back, basically back about basically a few weeks ago. Well, about 6 weeks ago, I guess. It does have earnings in 9 days. I probably would not be a buyer on this one, just because we're coming into earnings, and I don't know if I have an options play. Now, here's what I do typically with earnings. With earnings, I do like to do option plays into earnings, as you well know, so that one might be a good candidate for that. But the question is, what kind of earnings are they expecting? So let's kind of take a look. It doesn't look like we have any earnings at all. So we have a negative cash flow here. So this is true of a lot of growth companies, but their sales are up. When you have a growth company, and a growth company, the way you define a growth company, this is a company typically with no earnings or limited earnings, that basically it's all in the increase in the size of the company. So the most important thing with a growth company are the sales growth. So that's kind of what we're looking at. We had very good sales growth last quarter at 60%. We have 120 funds in this. About 36% of all the shares are owned by funds. We still do have that negative. We have that negative cash flow. Now, here's one that I would. There are some alternatives here, and one of them is called 3D Systems. That's also in the same space, but they tend to be a little bit stronger. Now they're pulling back, but they definitely have. They're a little bit stronger. This is a very good space in general. So let's kind of look to see we're 18 out of 197 sectors. So this is definitely very good. Machining, machine and material handling. It's a good space right now, as we see a lot of industrial stuff coming about. This is 3D. This is 3D. So XOME. It's getting back to XOME. XOME. Here's the thing. I would watch this. XONE. I think it is. Yeah, is that right? There we go. Okay. Let's look at the daily chart to see kind of if there's just any entry point. Doesn't look like it. Now, here's the thing. We may get an opportunity on this one. It reached a high back, back just a few days ago in February, 66.48. It's been pulling back since then. It doesn't look like it's gotten support yet. I would like to see it. I would like to see if it bounces off the 40-day line before I'd be interested in. So right now on this one, I think what you got to do, I think what you got to do on this one, this is definitely a watch list. You've just got to. I want to see it pull back, possibly for a reversal. But right now, I can't think you can buy it. I think you got to watch list this one, and I just think that's the way you got to go on it. So that's not what I wouldn't say that was really a buy right now. Thanks, Will. Should I buy in the dip? Okay, here's the thing about buying on the dip. I am not a big fan of buying on the dip, and I'll tell you why. Because sometimes the dip just doesn't even dip; it just keeps going down. So here's what I like to do: I like to buy in reversals. So let's see if any of these companies, like Walmart, WMT, let's see if there is a reversal there. WMT. There is a little bit of a deceleration. That's, as you can tell, because we have a market trend under pressure right now. It's not a confirmed uptrend. So that's one of the reasons we've had some of this, some of these pullbacks. A lot of companies are pulling back. Now, that can be a good thing. It's very frustrating to be in these times because you have to watch this thing. You have to see where they make a base. And then once they've made a base, then you buy them as they're moving out of the base. But right now, this isn't the case. This is pulled below the 50-day moving average. So basically right now, whereas for instance, Walmart was a stellar stock back in November and November of last year, the buy point on it was 133, 150, 133. Now it has pulled back. So the question is, would I buy this now? Probably not. As a matter of fact, I know I wouldn't buy it. It's only got a checklist of a 33%. Walmart is a terrific company, but remember, it's not just the company. It's sort of the prospects for the near-term future. So I would not be a buyer of Walmart on this one. Let's look at CRM. Now, I did do a bear put spread on this one. Then I did close it. It's continuing to move down, and no surprise there. I think that we didn't get support. We're at the bottom of the consolidation. We're going to see if it moves higher, but right now it's below the 200-day line. So I actually closed my position right after earnings. And by the way, CRM had terrific earnings. It's up 58%. I did a bear call spread on this, basically thinking that it was going to move lower, and it did. So that's usually how it is. So with CRM, I wouldn't do that. Now Target is another one. I don't think I would be a buyer on Target. TGT. I just don't think I would be a target. Okay, we pulled back significantly. That looks like a total a sell order right there. So boy, I'm batting 3 for 3. No, I wouldn't buy any of these right now. I just wouldn't buy in the dip. Let's see if they hold on to the 50-day line, but make sure that there's a reversal. Right now, these are in decline currently. So at least for now, I think we've got to be a little bit careful, with how that, with how that's going to be trading. I really do. I think we have to be a little bit more careful. A lot of things have pulled back today, and that's just kind of the way, the way it's been working. So unfortunately, not the thing. I don't think they really want to buy any of those right now. Thoughts on GM? Hey, thanks, Tim. GM is kind of a different story. I actually have Ford, and I did have GM. I like GM. It's off just a slight bit in after hours. I think that this could be a real story. This year. I mean, look at the way it's been trading. It's just been trading super. Here we go. We've got this beautiful ascending base here. Very, very nice. We have essentially what they call a 3-week tight. That's basically what's happening here. This is going to break out, and when it breaks out above about 58, that's going to be a very interesting thing. So let's kind of look at the daily chart to see if there's a way that we could buy this. Right now, you can see there was a second stage cup at 46.71. Now, here's what I would do on this one. I would wait a little bit on this one. I would buy this right at about 57, right here. Okay, 57. So here's the thing that I would do with with GM, because I really think I think it's a strong stock, and I think you can definitely buy it basically at about I think $57 plus 10 cents, or 57 57.10. So here's what I would consider possibly doing on this one. I would consider setting a buy stop limit order. Now, if you don't know what a buy stop limit order is, I explain exactly what this is in my video, one of my videos on YouTube. And what this is that this is an order that only executes if the stock moves above a price. In this case, $57. So 57.10, it's just 10 cents above that to make sure that there's conviction. And then it will buy the shares. And the advantage of doing this is that you typically buy on strength. You don't really want to buy on, everybody says buy in the dips. Well, I think that's a very bad way to trade. And the reason I do is because if it's dipping, it may just dip, and may go down even further. So let's wait until the best thing to do is wait until there is a reversal. It moves above a key buy point, and that's where you buy it. You want to buy stocks as they're getting more expensive, so that you immediately lock in your profit. And you can do that with this buy stop limit order. Now for GM, and that's the one we're looking at right now, I would recommend it at about 57 plus 10 cents, or about 57.10. So I think that it looks very, very strong for GM, at least for right now. I mean, look at this rating. It's got an 88 checklist. I never thought I would be saying this about GM, to be honest. But I believe that they maybe Mary Barrow may be doing the transformation. And here's the thing about them: next to Tesla, they make probably the most. They make the most EVs in the world. And interestingly enough, currently, General Motors, as far as I know, is the largest manufacturer of vehicles in China, which is really, really interesting. So. And we've got extremely good support by a lot of the funds. There's 1,929 funds in this. By the way, where the funds go typically is where you see the stocks go up. So I am very bullish on, at least for right now, on GM. Now, the auto manufacturers group has fallen a little bit. It's currently 41 out of 197, but it's still very high. Of course, Tesla is in this group, as well as Ford and a lot of, and Volkswagen and a lot of other companies. This is a major, major component. The amount of sales that could be done in this sector is amazing. So I do think with the reopening economy, I think that GM looks very, very good. And so what I would do on this is set a buy stop limit, or I wouldn't buy it right at this moment. Well, you could. I mean, this is a little bit early, but I do think that I would probably wait to do a full position, probably at about 57. But I do believe, even though this is not a classical buy point, it's basically reversed off the 21-day line. I do think you could buy this at this point, and I think that you might be very, very happy with it. It's got a RS rating of 81 and a very strong. There's a lot of buying activity on it. So, it doesn't look bad, and I never thought I would say that really with GM, but I think GM has got a very, very nice chart right now. So that might be something that you want to look into. All right, let's look at, oh, hey, Wendy, TIGR. TIGR. Okay, let's look at it. TIGR. Let's see. And this is a Chinese company. Oh, okay. I think I've heard of this. It's pulling back. Just wouldn't probably be a buyer right at this point, just because, you know, if this chart, I mean, we may get support at the 21-day line, but it looks like this is going lower. It does have a very strong relative strength, but I don't like this downward pointing line. Very strong checklist, and some funds in it, 20 funds in it. Here's the thing. I don't know. I mean, you definitely could buy this one, but I'm a little bit leery on this one. I just would watch this one. You know, I'm a little bit afraid of this right now, being that we're not in a pullback on the market. We're in a market uptrend under pressure, but you know, I do think that you know, it's just I think it's better to just keep your powder dry on this one. That would be my take on it. So thank you very, very much, Wendy, for that. Let's see if we can get another question. What I'm doing is I'm taking some of the earlier questions, and apologize for not getting to you earlier. A lot of interest on CCIV, Churchill, like the blank check company. You know, I wish you luck if you're in that. You know, I'm not really in it, just because I don't know what they own, and that's a big thing for me. I typically kind of like to see kind of what they're looking at, because the thing about a blank check company is it's heavily manipulated because they don't own anything, they don't have any earnings. So that's something that I would be a little bit careful. Is there any hope for Nicola? I don't think so, and I'm not trying to be flip or anything like that, but you know, that was a blank check company, and of course they didn't have a product. You know, they fired their founder, you know, OKL, I think it is. Okay, is that right? Nicola. I don't know if it may not be. It may not be. Yeah, I don't really think there is. You know, it's just one of those things. That's why I do like to buy companies that actually have real products. Nicola didn't have any real products. That was the problem. Essentially, it was a great idea for electric trucks, but it just didn't. You know, it wasn't working for them, unfortunately. So, kind of sorry about that. It just didn't work out for Nicola. All right, let's take a look for some other questions. Here you got. Oh, okay. You got one. Yeah, absolutely. I'm doing fine. Doing good. Yeah, I mean, there was a lot of snow here in Dallas, but you know, it's like a once in 10-year kind of thing, and everyone freaked out. But yeah, everything's fine now. It's about 70 degrees out there now. So, well, I guess it's a little bit down from that today. It's about, yeah, it's I guess in the 50s, but very nice weather right now. But thank you for asking. I so appreciate it. All right, Neo has been pulling back, as you well know. You know, after their earnings, you know, again, that's the issue. Once you know, this is why you got to avoid buying on dips. I know it's very tempting, but you never did want to do that, because this is again started to continue to pull back. It's up a little bit after hours, but it was down $6.48 a day, or about 13%, which is awful lot. Of, you know, will it find support? I think it's probably going to find support probably about 38.50. That's where I'm seeing it probably finding support. But right now it's pulling back, and if you're down more than 7%, this is when you sell it, wait possibly for a rebound. Just don't ride this escalator down, because it's very painful riding an escalator down, just getting, you know, less and less and less every time. So be very careful about this. You know, here's the thing, and this is a really hard thing to learn, and I had to learn this. Boy, this is a hard lesson for me to learn. Take your losses very fast and let your profits run. All right. What that means is that if you have something that's pulled back more than 7%, you got to be brutal and sort of just cut it, because if you don't, you'll end up, you know, being a long-term investor. I always talk about my brother. You know, He was in Oracle, I think, for 20 years. He was unwilling to take a loss, and I finally sold it, I think, about 6 months ago. It finally came back, but he was holding it from like 2000. So just don't be a long-term investor. That's just dead money. Take your losses quickly and then get into the things that are moving higher. That's really the main thing that you need to do. That's really the thing that you've got to do for that, because there's always opportunities every day to make there's always money to be made, but you got to be able to be there with it. You got to have that dry powder. Right now I have mostly dry powder and very little else. I'm also doing spreads. Apple seems to have rounded the corner. Now it looks like we may hopefully one of the reasons I think Apple is around the corner is that they announced that they're going to do some share buybacks. It looks like they have potentially they have potentially rebounded. Now here's the thing about Apple. Apple is, it's got a relative strength of 62 on this chart. I don't think that's really, you really need to look at that. I think what you got to look at more is how the volume is, and it seems to be trading. It seems to be trading up nicely. After it came all the way back down, almost really to 120, and that is that we have some very strong. Get the temporary line. We have some on the up days. We tend to have very strong volume, so that's a very good sign. And then on the down days, we tend to have lighter volume, not totally light volume, but lighter volume. So that's telling me that there is some upward momentum on Apple, at least for right now. It looks like it may have pulled back. It may be finding support at about 120. It's currently 125, and after hours it's up about 9 cents. So here's the thing. I'm still a little bit leery with it, because I do want to see it move higher, just to make sure that this isn't just a fluke. I would potentially buy it above the 50-day line, and that's 131. So where do we want to buy this? Well, I think that I want to see it move beyond about the true buy point is 137, and I think that's I don't think I don't think that's realistic, but 131 I believe is a place that we could possibly buy it. And I do like Apple. I just don't like the price that it's at right now. So here's what I would do. Here's what I would do with Apple. I would set a buy stop limit order for basically 131.50, and then plus 10 cents, or about 131.60 is where I would set the buy stop limit order. And basically what that is as the stock moves above basically this line here, this red line here, I hope you can see it. Let me see if I can. There we go. Get that pen there. When it moves above that line there, that's where you want to buy it, because I think then it will show a reversal to the upside. It's come down, it's bottomed, it looks like it's moving higher. Now, is that guaranteed? No, because Apple is a strange one. I think some of this has been, some of this has been prompted by the news that Apple's looking to buy back its shares, just because it doesn't think it's high enough. And if it does, it will send the stock higher. There's no question about it. Here's the problem right now with this group. Now, this is they're rating Apple in the telecom consumer products group. I don't really agree with this, because it's really a computer company. But as you can see, these groups have lost favor relative to some of the real economy areas, such as automobile manufacturers. You notice the automobile manufacturers are much higher now than some of the tech companies. And part of the reason for this is that we're starting to see a rotation out of some of the highest flying tech names that are represented basically in the QQQ, which is the NASDAQ 100. We're seeing a little bit of movement out of those into some of the more what they call real economy stocks. And I want to kind of show you this. I want to show you the chart for Deere, John Deere. You can't really get any more real economy than John Deere. It's been doing extremely well. And as you can see, it's got a relative strength of 88. But more importantly, the group that it's in is 49, as whereas Apple, was way down there. This group is way up, because the farm machinery, there's right now there's a rotation into things that relate to food production, and potentially because of the potential inflation that consumer inflation that is coming, we are going to have what they call stagflation in this country very soon. And what stagflation is that there's a big skills mismatch. A lot of people will be unemployed, but yet consumer prices will be going up very fast. So that's the reason why you're going to see a movement probably into some of the areas that will benefit from that. The areas that will benefit from that, of course, are agricultural, and of course the farm machinery fits right into that equation. That's another reason why, at least for right now, we're seeing a movement into that area. So that's kind of the thing. So with Apple, I think we got to be careful, because even though it's been a tremendous performer and they do have the share buybacks, I'm not quite as bullish on it as I was last summer, but I am still bullish on Apple. So I do believe that if Apple moves above about 131, then I think that it may be safer to buy it. Right now it's pulled back, it's reversing, and we'll see what happens. We'll see what happens, but I do think it's possibly going to do well. Thoughts on Zoom? Well, that's I need some consoling on Zoom, because I have this bull cut spread. I don't know why it has done this, but after hours it just seems like there was some kind of something going on there. So let's take a look at the Zoom chart. I do think, though, Zoom has a really good future, because I do think that Zoom, and they had terrific earnings, by the way. They're up 700% in a quarter. I mean, man, I wish I could do that. 700%. That's unbelievable. I do think Zoom and companies like Zoom are changing the way that we do business. I really do. I mean, my girlfriend is always saying, "Oh, I got a Zoom call. I got this. I got that." It's just changed everything. I know that I use it all the time, and here it is. This company 3 or 4 years ago, I didn't even know it existed. So, just shows you how this video conferencing area, especially the easy to use video conferencing area, because it's been around. I mean, Cisco has had WebEx for a long, long time, and there's other really good companies out there. By the way, there's a company called Click to Huddle, and it's a private company. It's kind of interesting, sort of in the space. But what's happening? I do think it's getting some support at the 200-day moving average, and I do think it's based there. But we'll see. That this was an awful big sell-off today, so obviously there's some programmatic trading going on here. If it does look like it's moved up after hours, so did we get a bounce here? I don't know, but it does look like, I'm hoping we did, because then it will make my spread worth more, or else I'll have to close it out. But it does look like it's moving higher. Checklist is 77%, so it's still just excellent. I don't know. I can't figure out what this was. Let's look at I just want to look and see what the short interest was. Well, the short interest is up 10%. So there was a lot of short interest on this. Okay, so this is but this doesn't totally explain that. So I don't know. But we do have a downward pointing RS line. So I can't really tell you. It does look like we are getting support at the 200-day moving average, which would be good, because that's where it should. That's the ultimate place to buy it, if that is true. We'll see if it falls below that 200-day average, I will close my position. But right now, it seems like it's getting support at the 200-day line, and the 200-day line is currently at about 370. So we're just right on it. We're just 370, 310 is right where we are now. So that's just it's just we're just on that very, very. Oh, did I get out of the TikTok? There we go. We're back. Okay. I got to remember to turn off my notifications on my machine, so we don't get it while we're in the middle of a broadcast like this. All right. So on Zoom, I just can't really tell you. I wish I could tell you. I do think it's going to reverse off that 200-day line. That's kind of what it's looking like, and I hope that's the case. All right. Down more than 8%. Oh, what do I do? Sell. If you're down more than 8% on NEO, this is yeah. Oh, I didn't put it up there. Sell. you're down more than 7%, this is the rule I always use. Sell it now. Sell now. If that is the case. The reason I say this, I know this is painful, and nobody wants to do this. But here's my point: sell it now, preserve your capital. There will be other things to buy, and maybe it will be Neo again. I don't know, but the most important thing is not to lose your capital, because if it gets going down enough, then it may not stop. So I would sell it. And I know that there's a lot of people that wouldn't agree with me. They would hold on, but I've just seen this too many times where it's 7 and then it's 12 and then it's 15 and then it's 20, and you turn around and you're down 30%, and to get back 30%, you almost have to have a 70% gain to get back that much. So it's very, very difficult. So here's the reason 7% is such an important number, is because once you pass that 7% mark, it takes much more to get back to where you started. With 7% down, it only takes about 8.5% upside to get back to where you're even. You go to 9% down, and it takes more than about 12 to 13%, and then it just gets worse and worse. So the further it's an exponential function. So the further you go down, the worse it gets. So my advice on this, and a lot of people aren't going to agree with me, but I would sell it, and sell it now. And then just live to, you're not going to win all the time. You're going to, sometimes you're going to get these setbacks. Here's the most important thing, is to buy in the best formation, like base formations. And then if it does pull back, try to sell it as quick as you can. Remember, cut your losses quickly and let your profits run. That's the main thing you want to do. All right. Thank you very much. Let's look at Palantir, PLTR. And I was shaken out of Palantir too. I made some good profits on it. But I also cut my losses quickly. It looks like we're getting some strength as well. So let me put that up on the screen here. Yeah, there we go. We've got a relative strength of 90, so that's still very strong. We do have a downward pointing RS line, though. That is not its best. Let's look at the daily to see. Yeah, we just don't really, we're hunting for support here. We don't seem to really have. The bottom of the consolidation is 22. We're at 24. I think that in order to buy this thing, we have to wait until it moves above the 40-day line. Let's take a look at the volume. We do have a declining volume. This is interesting because it looks as if we have a little bit more up volume to the, it looks like we have lessening conviction in the retreat. So here's the thing. It does look like it's getting ready to possibly base and then move higher. And the reason I can say this is because if you look at the volume, as it's moving down ever lower, there's less and less interest in selling it. So we do see some firming action here. And indeed, it is moving after hours. Would I buy this? Well, if I was in this and I was less than 7% down, I would hold this, because I do think it's going to, I do think long term it has some good legs. But here's the thing. If I was down more than 7 or 8%, what I would do is I would sell and I would wait it out, because this thing could retreat lower. The next important test, and it did test it here about 3 days ago, is 2250. So it does look like that may be the floor, and we may be going up, but this is not a reversal yet. So what we've got to do with Palantir, at least if we're not in it right now, we just have to watch list this one, and that's all we can do, and that's frustrating, because sitting here with all these ones, but watch list. But I would watch this now. I would not buy this, and I would just be super careful. But it can reverse, and it is a strong stock, and if you're down less than 7% on it, I would, I'd hold it, but I wouldn't hold it. I wouldn't hold it through some serious losses. I just wouldn't. Hi, Jim. Currently Rocket Bull spread is still a good trade. Ooh, I don't know if it is. That's a good question, Joe. I haven't checked it in a few minutes. Let's take a look. I just did this one this afternoon. I don't know what's going to happen. Let me take a look quickly here to see kind of what the value of it is. Oh, goodness gracious! I had to reach down and get my book. What I do is I have an actual ledger that I keep on my spreads. So let me just kind of see about this one. All right. Did I? Oh, you know what? I haven't even printed it yet. You know, I think you got to wait on this one, unfortunately, Joe. I mean, I put it out there, and then all of a sudden, it just, you know, Rocket just went crazy. It's going to pull back. That I am sure. But I don't. Let's take a look. Okay. Let me just take a look and see what that spread would be if you entered it right now. So let me just pull this up and see if I can give you a good answer on Rocket right now. You know, let's see if I can give you an answer on Rocket Mortgage. So I'm going to go and pull up the I'm going to go pull up the a little calculator here to see if I can give you a good idea on that. So we're on Rocket RKT. Wow, it's $41. Wow. Okay, let's select an option. I'm going to do a put. Let's go out a little bit further. Let's go to let's go here. Let's go there. And 25 and let's see if I can 20. Let's just kind of look here. All right. All right. Thanks for bearing with me here. I'll give you, here's one I think that you might be able to enter in here. It's a little bit different. Let me see if I can pull it up for you. Let me see if I can share this with the screen on this one. And that's this right here. And basically what this is, if you did it right now, that you could get these kind of results. You basically, this would be, it would cost you basically, you would get a credit of $147 if you enter this now. So for each one, now there's a risk of 353, but this gives you the payout. If it stays above, let's see, if it stays above $23, then you would break even. So this gives you kind of an idea of that. But what I can do is, you know, put out the short link on this one if you're interested. But I think that you possibly could do it. That's going to give you this kind of an entry. So let me take that watch list off there, because this is actually the option spread here and not a watch list. Okay. Yeah, I definitely think you could, but I don't know if you could use the same numbers that I had on my example. I think what you got to do is you kind of got to fool around a little bit with that option calculator to see if you can get a good risk reward. But I do think that there is some money to be made there on Rocket Mortgage. Now, here's the thing about Rocket. I do think that it's going to come down a little bit with to Earth. What about a merger with Lucid? Well, here's the thing. You know, I know a little bit about Lucid. I am not a fan of Lucid. You know, it's sort of a dog with fleas. I mean, I'll be honest with you. I'm here near Richardson, Texas, and there are some issues with you know, there's some real issues with Lucid. I mean, you know, it definitely, you know, it's a well-known company, and I think they were delisted. I don't know if I guess they were delisted. You know, so I just can't really, you know, I can't really say that. I just don't like. I just want to see it, you know, after they've traded. I mean, I just, you know, this is going down. They may have a good Lucid was not a very good company. I know that, you know, back when AT&T was a monopoly, they were a great company. because everybody had to buy from them. But there's just so many other choices right now. I just wouldn't recommend it. I mean, I know that everybody is hyped on it, but I think Churchill Capital, I'd pass. I'd pass on it. Sorry. Thoughts on Street Smart Edge? You know, I don't use Street Smart Edge. Interestingly enough, I use Charles Schwab, but I don't use Street Smart Edge. What I use, I use the I use Thinkorswim actually, and that's I use it primarily in my margin account, and I really like Thinkorswim, but that's a TD Ameritrade thing, so I can't really give you a good a good readback on Street Smart Edge. I've heard it's very good, but I just don't know. I just don't know. And we've talked a little bit about Zoom. Let's see. Let's just last but not least. Let's see how Zoom has been trading. It's up after hours, so I just think this is a bounce. I think this is a bounce. I think it's going to trade up tomorrow. My guess is it's probably gonna bounce, and it's probably going to trade higher above the 50-day line. Even though there was a lot of selling today, I think a lot of people were washed out of their positions, but I don't. I'm holding on to my spread, and I think it's going to move higher. So my spread, basically, I have a put spread, and I have a 392.50 and a 402.50. That's the spread on it. So it has to move up a little bit for it to make sense, but I'm still holding it. I'm still absolutely holding it. Okay, well, I've come to basically wait a minute, we have one of my favorites, Space, and this is of course Virgin Galactic, and I've made money on this one. Thing I've noticed about Space, you hold this into earnings and you sell on the day of earnings. That's the way to go on this one. Right now, yeah, okay, yeah, it's just not a time to buy it yet. I mean, this thing gets hot, and it's hot and it's cold. I can't recommend it right now. I just want to see some more hype on it. If there's more hype, then I'm in there. If there isn't, I'm not. So let's look at the weekly chart. Yeah. Okay. Obviously they haven't had any earnings because they don't have earnings. They're they're just burning through cash. So I don't know. This is sort of a fad stock. I've made money on it every time it's peaked into earnings. I've been a buyer and then I've sold right there. So I can't recommend it right now, and that's my opinion on Space. I like the idea, but I don't like the stock, at least for right now. Thanks again, everybody. I'll be back tomorrow at 2:30, and I so appreciate you taking time to take a look here. If you want to get on the action trade alerts, and I do, I try to put these out as often as I can. I don't always get them out at the right time, but last 2 days I've had action trade alerts. Super easy to subscribe. All you have to do is go to www.Dallas Trading Floor and sign up for the action trade alerts. And of course, they're all free, and you can just get on the list, and we will send them out as soon as I make a trade. Even sometimes I have misspellings and all that kind of stuff. I don't even proofread it. I want to get it out to you so fast. Like with Zoom today, I was typing really as fast as I could, and the price was changing every second. I mean, so on Rocket Mortgage, so it got out there. We got it out. We got it out there. But anyways, action trade alerts, and they're totally free, and so it's a good thing to do. So until tomorrow, I will see you tomorrow, and happy trading.